Hello everyone, welcome back to the channel. If you file an income tax return every year, then today's video is important for you. For assessment year 2026-27, several important changes have been introduced in the ITR forms, and these updates may directly affect how you file your return. So before submitting your return, make sure you understand these changes. In this video, we'll cover everything in simple language. We'll understand who can file ITR-1, who cannot file ITR-1, what the new disclosure requirements are, and what important things you should check before filing. So without wasting any time, let's get started. Page 2. Who can file ITR-1? First, let's understand who can file ITR-1. If you are a resident individual and your total annual income is up to 50 lakh, then you may be eligible to file ITR-1. Eligible income includes salary income, income from up to two house properties, income from other sources such as interest, long-term capital gain under Section 112A up to 1.25 lakh, and agricultural income up to 5,000. Also remember, the due date for filing ITR is 31 July 2026. Page 3. Who cannot file ITR-1 plus new restrictions. Now let's move to an important section. Who cannot file ITR-1? This is one of the most common areas where taxpayers make mistakes. So pay close attention. You cannot file ITR-1 if you are an RNOR or NRI. You are a company director. You hold unlisted shares. You have business or professional income. You earned short-term capital gains. You have long-term capital gains under Section 112E above 1.25 lakh, or you have any other category of long-term capital gain. Now let's look at the additional restrictions introduced in the form. You also cannot use ITR-1 if you own more than two house properties, you have foreign assets or foreign income, you have signing authority in a foreign account, you received income from lottery or horse racing, you want to carry forward losses, or you are claiming international tax relief provisions. In these cases, you may need to select another ITR form instead of ITR-1. So before filing your return, always make sure you choose the correct form, because choosing the wrong ITR form can create problems later during processing. Page 4. Compulsory ITR filing rules. Now here comes an important update. Many people think if there is no taxable income, there is no need to file an income tax return, but that is not always true. In some situations, filing ITR becomes compulsory even if your tax liability is low or nil. For example, if your foreign travel expenses exceed 2 lakh, if your electricity bill exceeds 1 lakh, if your business turnover exceeds 60 lakh, if your TDS and TCS together exceed 25,000, if your savings account deposits exceed 50 lakh, or if your current account transactions exceed 1 crore, then ITR filing may become mandatory. So don't assume that low tax means no filing requirement. Page 5. General information updates. Now let's talk about some practical changes introduced in the general information section. This year, the ITR forms have become more flexible and more detailed. One important update is you can now add a secondary address along with your primary address. This can be useful for people who stay at multiple locations or for senior citizens. Another major update, you can now provide two mobile numbers and two email IDs, one as primary and one as secondary. This helps maintain communication even if one contact becomes inactive. Another important point, for ITR-1, no separate Form 10 IE is required. Taxpayers can select their preferred tax regime directly inside the ITR form itself. These may look like small updates, but they improve flexibility and reduce filing issues. Page 6, Salary Income plus HRA changes. Now let's move to the salary section. This year, some reporting requirements have changed. First update, Section 89A has been removed from ITR-1. It has now shifted to ITR-2 and ITR-3. Next, if you are claiming HRA exemption, the reporting requirements are now stricter. You may be asked to provide landlord details, landlord PAN, and relationship details. This enables better verification of HRA claims. Another update, employer declarations and salary reporting formats have also become more detailed. So, before filing, keep all salary proofs and supporting documents ready. AG7 House Property Changes. Now let's move to the house property section. This year, the reporting requirements have become more detailed. Taxpayers can now report rental income from up to two house properties in ITR-1. But along with that, additional disclosures have also been introduced. You may now need to provide details of the co-owner and details of the tenant in certain situations. Tenant PAN may also be required for TDS compliance. Another important addition, a separate field has been introduced for unrealized rent, which means rent that was expected but not actually received during the financial year. So make sure your property records and rental details are properly maintained before filing. Page 8, Capital gains changes in ITR-1. Now let's talk about one of the most important updates, capital gains reporting in ITR-1. This year, long-term capital gain under Section 112A has been included in ITR-1, but only up to 1.25 lakh. This gain will appear in both gross total income and total income, along with a declaration showing that no tax is payable on the exempt portion. Another update, exempt income reporting has now been divided into separate categories, making reporting more structured. But remember, if you have short-term capital gains or long-term capital gains other than Section 112A, then ITR-1 will not apply to you. So always check your investment statements before selecting the ITR form. This year, deduction reporting has become more detailed. If you are claiming deduction under Section 80G for donations, you may now need to provide transaction reference number and IFSC code. Also, aggregation of donations is no longer allowed in certain reporting situations, so details may need to be entered separately. Now, another important update for deductions under Section 80U and Section 80DD. Additional details regarding disability have been introduced. You may now need to mention the name of the disability and the type of disability being claimed. So before filing, keep all supporting documents ready. Page 10, loan related deductions. Now let's talk about loan related deductions. This update affects people claiming deductions for education loans, home loans, and electric vehicle loans. If you are claiming deduction under Section 80E, Section 80EEA, or Section 80EEB, you may now need to provide additional details such as lender's name, bank name, loan account number, and outstanding balance as of 31 March for electric vehicle loan deductions. Loan sanction details and lender information may also be required. This means simply entering the deduction amount may no longer be enough. Make sure all loan documents are available before filing. Page 11, Section 80 GGC plus political contribution reporting. Now let's look at another important update. If you are claiming deduction under Section 80 GGC, there has been a reporting change. Now, political contribution details may need to be declared separately. The reporting has become more structured, and contribution information may need to be entered party-wise in the form So before claiming this deduction, make sure your records are properly maintained. Page 12, new fees plus miscellaneous changes. Now let's talk about some important miscellaneous updates introduced in the ITR forms. A new provision has been introduced, fee under section 234I. This may apply if a revised return is filed after 9 months, but before 12 months from the end of the assessment year. Another important point, late fee under section 234F may continue to apply separately depending on eligibility conditions. There is also a new update related to the representative SSC section. Earlier, this was available only in selected ITR forms, but now this field has been expanded across additional ITR forms, and instead of PAN or Aadhaar, only contact details such as phone number and email ID may be required. This section may be relevant in cases such as death, minor taxpayers staying abroad, or situations where filing cannot be done personally. These changes show that the forms are becoming more detailed while also simplifying certain reporting areas. Page 13, Interest Income Reporting. Now let's move to another important update, interest income reporting. This year, the ITR forms provide more clarity on how certain interest income should be reported. If you earn interest from companies, non-banking financial companies or NBFCs, or housing finance companies, that income may need to be reported under the other category in Schedule OS. Another update, separate reporting may also apply for certain interest income taxable at concessional tax rates. So before filing, review your interest certificates and income statements carefully. Page 14, ITR-3 changes plus virtual digital assets. Now let's talk about changes in ITR-3. This update is especially important for business taxpayers and traders. One major change, turnover and profit from futures and options trading may now be reported separately. Another important addition, a new schedule has been introduced for virtual digital assets. This means transactions involving digital assets may require separate disclosure. The reporting format has become more detailed and individual transaction reporting may be required. There is also updated reporting for MSME interest disallowance, where aggregate reporting may no longer be sufficient. So, if you deal in trading, business, or digital assets, make sure your records are complete before filing. Page 15, Partnership Firm Update. Now let's look at an important update for partnership firms. A change has been introduced in Schedule IF. Under this update, partnership firms may now need to provide additional disclosure regarding remuneration received during the year and interest received during the year. This means reporting requirements have become more transparent and proper records should be maintained before filing the return. Page 16, Cash Transaction Rules plus Audit Update. Now let's move to another practical update. This year, the language related to cash transaction conditions for audit applicability under Section 44AB has been simplified. Earlier, the provisions were considered complex and difficult to interpret. Now, the wording has been revised to make the conditions easier to understand and apply. The objective is to reduce confusion while determining audit requirements. Page 17, Audit Conditions under Section 44AB with 44AD. Now let's understand an important concept, the interaction between Section 44AB and Section 44AD. Suppose a taxpayer chooses presumptive taxation but declares profit lower than the prescribed presumptive percentage. In that situation, tax audit may become applicable if turnover remains within the prescribed limit, declared income is lower than 8% of turnover or 6% for eligible digital turnover, and total income exceeds the basic exemption limit. For example, if turnover is 1 crore, expected presumptive income is higher, but actual declared income is significantly lower. Audit requirements may apply depending on eligibility conditions. Page 18, ITR 4 changes, presumptive taxation. Now let's move to an important update in ITR 4. This update mainly affects taxpayers using the presumptive taxation scheme. This year, some additional reporting fields have been introduced. Investments have now been added as an optional disclosure. At the same time, bank balance reporting has become a required field in certain situations. This means financial information reporting is becoming more detailed and structured. Another update, a new provision under Section 44 BBD has also been introduced for certain non-resident service scenarios related to technology and manufacturing activities. Page 19, Section 44 add lock-in period. Now let's understand an important concept, the Section 44 AD lock-in mechanism. If a taxpayer opts for Section 44 AD and later declares profits below the prescribed presumptive rate, then restrictions may apply. In certain situations, the taxpayer may not be allowed to claim Section 44 AD benefits for the next 5 assessment years. This is called the 5-year lock-in period. For example, if Section 44 AD was selected earlier and in a later year lower profit is declared, then future eligibility under Section 44 AD may be impacted. Regular books of accounts may also become necessary depending on the situation. So always evaluate the long-term impact before choosing presumptive taxation. So those were the major ITR form changes for assessment year 2026-27. Let's quickly recap. Who can file ITR-1? Who cannot file ITR-1? Compulsory filing conditions. Salary and HRA updates. House property reporting. Capital gains changes. Loan and deduction disclosures. ITR-3 and ITR-4 updates. Audit rules. And Section 44 AD lock-in provisions. The biggest takeaway is ITR filing is becoming more detailed every year. So before filing your return, review your documents carefully, choose the correct ITR form, and make sure all disclosures are accurate. If you found this video helpful, please like, share, and subscribe to the channel.